most traders need to expand and say, all right, how much can I make per year? You want to make 100% a year, you might have to risk 50% to get there, 40, 60% to get there. With the trading space, that fire is the price.
What do you think about prop firms?
They're bullshit, man. They're not real. It's all fake money. A lot of them are just signing on these social media influencers, giving them fake accounts. Just all fake money. It's not actual trading. I guess I can't say anything, but I think they're detrimental because you can just open a demo account with a real brokerage firm and do it for free, right? So why would you pay $100 a month for a prop firm? So they're calling themselves prop firms, but they're not.
What I heard also is they give people the payouts in the beginning with the smaller accounts to get them excited, and then they start buying more and bigger accounts, spread the word, and then suddenly they have violated the rules. Say, hey, look here, this trade, you're out.
I don't know about the Forex space, but the future space. So I think in a year's time, most of them will be closed.
This is Trading Unscripted by Block Research AI. My guest today is Jacob Amaral, one of the best coaches when it comes to building automated strategies in NinjaTrader. Your YouTube channel is under the same name, and since you created the channel, you have received over 2 million views and published 267 videos, as of right now, about all kinds of quant trading related topics. I'm very much looking forward to this episode because we are working in the same field, but using very different tech stacks. I'm excited to learn about the similarities and differences between TradingView 3 setup, AllTrading setup, and your NinjaTrader setup. So welcome to the show, Jacob. So great to have you here. What did get you into trading in the first place?
First off, thank you for having me. I appreciate the opportunity. It's always nice to mingle with other people in the quantitative space. What got me into trading? So the first time I learned about trading was at my first real-time job. I was a software developer for a small company, and my boss was talking about the Snapchat IPO and that he was buying Snapchat because it was so popular back then. So that's when I first learned about what a stock is, and he actually showed me how to buy the stock and on a brokerage account and how to fund a brokerage account. So he helped me out actually get started with that. But it was all obviously, of course, manual trading, discretionary trading. And I ended up actually buying Snapchat and losing some money on it. So that was my first taste of what it's like to trade.
So you started straight away with a profitable trade, not like most of us going down 20, 30K.
Yeah, no, I lost money on that trade, but it was a small amount. I think I put in $500 or something. And then after that loss, I kind of just didn't continue because of the loss. And, I still had a job and as a software developer, so I didn't really continue it.
When was that? Is it like in the time before webhooks and stuff?
Yes, this was 2016 maybe, or 2017. I think when Snapchat IPO'd. And at that time, yeah, I was a software developer. I was working on some side projects, building video games. I didn't know what quantitative trading was or algorithmic trading, or that you could even code trading systems. And then 2019 happened, and at the time I had a different job. I was still a software developer. However, my boss's brother was a retired hedge fund manager in Canada. And I learned about him. Sometimes he would come out to lunch at work. So we would talk, and he would talk about, I asked, what is a hedge fund? How do you guys trade? How do you guys make money? That sort of thing. So I learned more about the field then. And he taught me more stuff about, going long and short and basic techniques and all that. And then through networking over 2019 and 2020, I landed a role as a quantitative trader at a small family office. And also in that time in 2020, I found out about NinjaTrader and their platform. I think it was through an ad, through a Google ad. So I downloaded NinjaTrader, and me being a software developer, I was like, oh, cool. Like, you can code strategies and you can tell strategies to automatically buy and sell and set profit targets and whatnot. So
one question there, how did you get into that small quantitative office, into that job?
Yeah, sorry. I'm skipping lots of parts. My apologies. So through my boss's brother, we ended up talking, and I wasn't happy with my current role at the time. I was a software developer at a office manufacturing company. I wasn't happy with, it wasn't the right product fit. And through just talking to him, and he said, well, my brother has some contacts in the hedge fund industry. Like, he may know someone that's hiring. And he did. He knew someone that was looking for a quantitative developer and more of a trader, actually. And he was able to get me that interview, and I guess I was good enough to be hired. So that's how I got the job.
Nice. How small was the company, if you say small?
Very small. So 6 employees, and the assets under management is now it's 8 figures, but it was 7 figures. So it's a very, very, very small fund in terms of if you're comparing to other funds.
How was the performance?
When I joined, I didn't ask about that because I didn't know back then. But for the year of 2020 when I joined, so I joined, I believe it was maybe June or July 2020. I actually didn't have a job for 4 to 5 months. So when I started my YouTube channel, it was while I didn't have a job. And that's why I started the channel as well. But for the year of 2020, we were above, I think we managed to scrape up maybe 6%. So not that great compared to the market. And 2021, we had a break-even year. 2022, we did fantastic because of the volatility. We finished up 22%. Last year, we had an amazing year, triple-digit returns, and
you still work there?
I still work there today. Yeah,
right.
Yeah. So I have a pretty good setup, and they're really cool with me having the YouTube channel and stuff. So that's very nice. I have that flexibility. Not everybody has that flexibility. If you work at a bigger firm, they probably wouldn't let you. They probably wouldn't let what I do on my YouTube and what I talk about. So I am very blessed to be in this situation.
The only other YouTuber I can think of would be Coding Jesus. That is very similar to your setup. Do you know him?
Yeah, I watch his videos. He goes way into more depth, but he's in a very similar situation, and so I guess some companies are cool with it as long as you're maybe transparent and you say, hey, I have a channel, I talk about trading stuff. I'm not going to reveal proprietary information, but I do teach people how to code and how to build good systems. And I guess it worked out for him too. So that's really cool that he's been able to do that.
So you neither reveal the name of the company that you work for or any like trading styles that you do?
No name of the company, no personal information, nothing that would, as long as I don't do anything that ruins our performance, then they're okay with it. So I've just been careful to be very just humble about that stuff and not share information that could cause harm. That's the goal. So
basically you learned everything while doing it at the firm that you work for still? Because you didn't have so much background in finance, right?
Yeah, I had no background in finance. And when I was first hired, I was just a quantitative developer. So I developed a lot of tools, or mostly tools to aid in day-to-day tasks, whether it was, build a tool to, check the correlation of these strategies, or do it, in a way that's faster than Excel, or that can be viewed this way. So I was hired as a developer. So a lot of my tasks were software development and not really trading at all. And the trading aspect I was doing on the side, as you could see from my videos, where I was, after work, I was on NinjaTrader and trying to build strategies and back testing and all that sort of stuff. And then, funding my futures account and starting with micros and losing money at the start, as always, as everyone does. So yeah, a lot of my trading was kind of outside of work, and inside of work was more development. But I was around people that knew how to trade, and so I would pick up stuff from them as well, especially after my first year. It took longer for that, but yeah, that's sort of how I learned it.
What is the tech stack that you're using at the firm? It's probably not NinjaTrader. You have your own proprietary execution engine and backtesting.
Great question. Yeah, so we use our own proprietary execution system using Python, and as well as some C++ for some of the high frequency trades. Some of our strategies do use NinjaTrader, so we've been able to copy the signals from NinjaTrader and put it to our own system. And that's because now that I'm so well versed in NinjaTrader, I'm much more efficient building strategies and testing strategies because I've been so used to it and been using NinjaTrader for over 5 years. So we've been able to copy some of those signals over, and then we have an execution system that will help reduce slippage and reduce latency and some other proprietary information. So yeah, mainly Python and for our execution and order entry system. A lot of our tools that we use to work with the portfolio, whether it's portfolio optimization or correlation analysis, is honestly a lot of Excel and CSV. So that part of the business is very simple.
Why Excel and not pandas?
Great question. So when I joined the firm, a lot of the team was older, and thus their technical tools weren't bleeding edge. So a lot of the portfolios that they were already trading were actually through Excel, believe it or not. And they've been doing it for a while. Even though it's a relatively new company, the team was older. So we haven't pushed for a change on that sense. There's a saying where, if it's not broken, don't fix it, which we're currently abiding by. However, that's not always the right solution. So I think that's why I think an older team, and I guess focusing on, hey, it's working now, let's keep going, and not use, more bleeding edge technology. I don't think Pandas is bleeding edge, but it is slightly newer.
Yeah, I was just wondering, right? Pandas is also not so new. Like, how old are these people?
Yeah. So,
how would you, like, the people that watch my channel mostly use no or low code tools like 3 commas, Altrady. Probably you heard about it.
I have, yeah. I've used 3 commas myself. And it's a really great product. I think it's a really good product for any trader, not just beginner traders. Sure. If you're not focused on, if you're holding positions if your hold time is hours or days or longer, it's a great tool. And it's very easy to use. So that's cool to see. And that's definitely bleeding edge.
Yeah, it's really error free. I find the position management is very clean.
Yeah, it's so simple that there's less bugs and less errors. Whereas the stuff that I'm developing and trading with, now we have a template and a setup that reduces that. But when I first started, there was lots of bugs because it was so complex. And NinjaTrader using C# and an object-oriented language, it does make it a little bit more complex, especially for beginners compared to 3 commas, PineScript and TradingView, and even TradeStation, which has easy language, which is not object-oriented, but much easier to write code in.
So how would you compare, or how would you describe the differences and similarities between, let's say, if you're using PineScript strategy executed through 3 commas on your exchange, or doing everything in NinjaTrader? What are the advantages, disadvantages? Yeah,
great question. So NinjaTrader, I think the major pros are that NinjaTrader has been around for a while. It's a 20-year-old product, so you do have the benefit of reliability and bug fixes and security fixes over the years. So you have a reliable system and engine that's been around for a long time, whereas 3 commas is still been around for a while, but it's probably not as long as NinjaTrader. So I think that's the first benefit. The second benefit is that if you want to trade, a futures product or a Forex product, NinjaTrader is also a brokerage too, and they do offer favorable margin and commissions and all that. Whereas 3 Commas can connect different brokerages, but is not a brokerage in itself, so it can't offer those benefits.
So in crypto universe terms, NinjaTrader also contains something like Binance. NinjaTrader has their own markets, their own liquidity. It's like an exchange like Binance?
No, they don't.
Or do you need to connect it to an exchange?
Yeah, you have to connect to an exchange. So
what did you mean by brokerage?
Sorry, they're a futures brokerage. So you can open a futures account with them, and that's obviously abided by the CME, the Chicago Mercantile Exchange. But you cannot trade crypto on NinjaTrader brokerage because they're only legally offering futures trading. So what I was trying to say is, if you're a futures trader, there's benefit to that, to going with NinjaTrader, and that's what we primarily trade. We only trade, actually. So whereas 3 Commas, I'm sure, works with futures and can connect futures accounts, but maybe 3 Commas was more crypto first or Forex first, so their tools and features.
3 Commas is crypto only crypto exchanges.
Okay. Oh, I didn't know that. Okay.
But for spot or futures, it doesn't make a difference. Like if Bybit offers spot, you can also access the futures through 3 Commas. I think it's still not 100% clear for somebody who's never traded like classical futures or stocks how you can compare, like if you had that set up, TradingView, 3 Commas, Bybit, how would that translate into the world of stock trading or futures trading, CMDs?
Yeah, so there is a difference between the two. The futures that we trade are on a regulated exchange called the CME, so they're centralized, and all futures contracts get traded through there. So whereas big, crypto futures are still decentralized and they're traded amongst many exchanges. So I think there's a big difference there. But as far as the rules, right?
So the futures can only be traded in one spot worldwide. Basically, there's one exchange in crypto words. Only the CME.
I guess for US futures, yes, they can only be traded on the CME. Yeah.
Right. And NinjaTrader connects to that just like 3 Commas connects to Bybit.
Correct. Yeah. NinjaTrader has multiple connections. You can connect to multiple brokerages. Obviously, NinjaTrader as their own. Then they have other connections like Interactive Brokers, etc. And then once that connection is placed, you can place trades on that.
Just that NinjaTrader has basically TradingView included. Looking at 3 Commas again, which doesn't have like the ability to write code.
Correct. Yep. NinjaTrader, you can write code from scratch in C#. It's .NET based. They have tools to build strategies without code called the Strategy Builder. But yes, you have that option, and that's what most developers do. Or I guess 3 Commas doesn't have that.
Yes. So as a stock and Forex newbie, if I want to also go into stocks or futures, why should I not go to MetaTrader but NinjaTrader?
So yeah, I've heard about that. So MetaTrader is more of a worldwide platform. So they, if you check their company, I think they're headquartered in Cyprus, which is obviously from a regulatory perspective doesn't meet everyone's standards. And if we're just talking about the features of both products, I haven't used MetaTrader, so I can't really comment on, hey, MetaTrader's missing this feature or needs this. NinjaTrader is definitely more for the US market because they, in their advertisements and where they're located and what they support is mostly US futures. However, you can trade, futures on the London Exchange or Hong Kong Exchange as long as your brokerage supports it. MetaTrader, If we're comparing NinjaTrader to MetaTrader, I can only say why you would use NinjaTrader over MetaTrader, and the primary reason is it's a trustworthy source. It's regulated by the NFA, which is the National Futures Association. So NinjaTrader, and their brokerages that are connected are regulated and go through high scrutiny to be available, whereas MetaTrader doesn't need that.
It seems like MetaTrader didn't update since 25 years. They still have the exact same design, right? It looks horrible. It feels like Windows 95.
Yeah, I like I said, I haven't downloaded it, but I've seen their website, and it looks a little shady. So, however, I know lots of people that use MetaTrader, and I see videos all the time of people making thousands of dollars on MetaTrader. I don't know if it's real or not, but if it works for you and you make money through it, that's great. But I would prefer a reputable company like NinjaTrader.
Cool. What is currently your favorite setup to trade, and why does it work well?
That's a good question. My favorite setup right now, I've been liking the gap fill setup. So the reason why I like it is it's a pattern I'm seeing day to day with the Nasdaq futures, where if you look at the cash session, so the cash session is the normal stock market hours of 9:30 a.m. Eastern to 4 p.m. Eastern. Now, futures can be traded 23 hours a day, but when that normal cash session opens, that stock market session, there's usually a gap from yesterday's close. And I find very often, 70-80% of the time, Nasdaq will fill that gap. So say Nasdaq on yesterday closed up, and then it closes down today or opens down today. So there's that downwards gap. Usually Nasdaq in the morning will fill that gap where the price will rise and fill that. And that's a pattern I've noticed, and we've had a couple strategies year to date perform very, very well. So essentially you're going to go long if there's a gap down, and you're going to go short if there's a gap up. And then, have a profit target and stop loss.
That's a very well-known approach, isn't it? Right? On YouTube, you see fill the gap kind of strategies everywhere. I would have assumed it's more efficient, but you say it still works.
Yeah, it still works. It's definitely not well known to beginners, but yeah, I'd say anyone intermediate would probably know it. And it probably works on stocks too, but it definitely works with the future systems that we are trading. And definitely one of my favorite setups. It's been doing well for us. So if it makes money, it's one of your favorites, right?
But you're talking about single stocks or single future derivatives, not about Nasdaq or something like ETF.
Yeah, sorry. It works the best on Nasdaq futures. So there's a futures contract on the Nasdaq index that you can trade.
So you trade the index, really?
We trade a lot of stock indices. Yep.
That's interesting. Like I would have assumed like these to trade an index, it's already so efficient that you don't have any chance to get in between. Interesting.
Yeah, a lot of people say that. There is a lot of recurring patterns that you can find with any instrument that you decide to trade. So as long as you test properly and you find those recurring patterns in and of sample, you can trade it. So, Nasdaq futures, S&P futures, Dow Jones futures, they're all very highly liquid, and they are a lot of prices baked in, but there's a lot of recurring patterns you can find within the last 10, 15, 5 years. And if you find those patterns, that's what we do. Patterns repeat most of the time. So as long as you do proper testing, there's opportunity to make money with those.
So how much money can you make with that? Like 1% a day?
That's a good question.
You have no idea how many times I get asked that question, seriously. Hey, I need a strategy that makes 1% per day. Me too.
Oh God. Any strategy that makes 1% a day will lose you money because it's just too good to be true. That's a very naive question, And you can't get mad at it because usually anyone that's asking that question is maybe a beginner, and they see, the problem is they see all the highlights on social media of these traders making lots of money, whether it's real or fake, right? And let's be honest, most of the time it's probably fake. And then they see those highlights and they say, oh, I can make that every day, not knowing that, well, your pattern's not going to work every day. In the long run, your pattern might work, but if your strategy trades 100 times a year, there's going to be a percentage of those times where it's wrong and you won't make that percentage, or you'll be down for the day. So, most traders need to expand and say, all right, how much can I make per year? And how much risk am I willing to take to make that per year, right? If I want to make 20% a year, you might have to risk 10% to get there, 5% to get there. You want to make 100% a year, you might have to risk 50% to get there, 40, 60% to get there. That's what your horizon should be, not per day. If I make 0.1% in a day, I'm happy. That's pretty good.
Yeah. If that compounds, it's crazy. What do you want to say?
Something on the tip of your tongue?
Yeah, I just had an idea, but then continued listening to you and it flew away. What a pity.
Sorry about that. My apologies.
So I interrupted you. You're trading the gap. That's basically your most favorite setup. Like,
Yeah.
Just in terms of risk to reward, win rate, Sharpe ratio, what are your numbers around that?
Yeah, so we don't care about win rate, risk to reward. I know they're usually simple topics to talk about. When we build strategies, we care about return to drawdown, which is also can be known as the Kalmar ratio.
Yeah.
So return to drawdown, if anyone doesn't know, is basically the net profit divided by the max drawdown of a strategy. And obviously, if your net profit is higher than your max drawdown, you have a positive return to drawdown. So
most important metric for sure.
Yes. Yeah. Sharpe is also very important for some firms. We don't use Sharpe, but a lot of bigger firms do use Sharpe because Sharpe measures the volatility of your returns, and most portfolio managers want a lower volatility. But these gap fill strategies, they all have greater than 2.0 return to drawdowns. So they're making, 2 times more or greater than their max drawdown, which is what we want. Now, some of these strategies have a 1-to-1 risk to reward. The profit target is the same as the stop loss. Some of them are double. Some of them are triple. Some of them are half. It all depends on how the strategy correlates to the portfolio. And that usually just doesn't matter as long as the strategy has low correlation or negative correlation. It improves the portfolio's return to drawdown, then we'll trade it regardless of the risk to reward it has.
Did you use a strategy which would be similar to our Tyson strategy with like 12-to-1 risk to reward, very low win rate, like exhaustion strategies kind of?
Yes, we have a lot of trend following strategies that have no profit target. They have a stop loss and they will sell after a period of time or at the end of the day. And those strategies win maybe 20 or 30% of the time. But on those big days where you get excess returns, they can win 12 times, like you mentioned.
But there are such short-term trades, like they close before the end of the day? Or do you have like 1 month, 2 months kind of trend following also?
They're pretty short-term. Like our longest strategy might hold for 2 or 3 days. That's our longest holding strategy. But our average hold time is usually, I don't know, off the top of my head, probably 6 to 7 hours.
All right. And do you get emotional, or is everything in such good frameworks that there is no like panic moments? Oh my God, we're down 40%.
No, we get emotional for sure. We go through drawdowns, and we have periods of time where we lose money, and it won't affect how we run our models, but it sucks, right? You don't feel great. A lot of my stress I find my stress, if we're not doing well, kind of seeps into my personal life too. Or I have a bad trading day or, a bad month. I'm definitely more down. but we've learned to stick to our models, and if you're in a drawdown, it can happen. And you're actually more often than not you're in a drawdown. And yeah, it does affect me, but it won't affect our systems. Just affects us psychologically, and usually there's something else we can do if we're in a drawdown. Well, can't really just look at the P&L every day. Let's build some new strategies or build some new tools to help bring more value to the firm while we're in that drawdown.
Mhm.
And sometimes drawdowns take a long time, sometimes they take a short time, but yeah, anytime there's real money on the line, you're gonna have emotions, regardless if you're trading an automated system or not. I remember when I first started trading on NinjaTrader, I would look at my P&L I'd have, 3 or 4 systems running, and I'd be like looking at the P&L every second of the day. And
Yeah.
I wasted so much time looking at the P&L. It's terrible. It's a terrible
Mhm.
habit. It would stress me out. And the worst thing about it was if the trade went against me, like I was in a red position, I was down, I would go and override the system and sell it, even though the system told me not to sell it. I would do it, and that was the worst habit ever. That I lost a lot of money on that because there was days where the position would reverse and go back up. So yeah, it's don't look at the P&L. It's bad.
Absolutely. And now for 95% of the time, the emotions don't affect your decisions.
Uh, I would say, yeah, they don't affect the current models running. They may affect what models we're going to build in the future. For
Mhm.
example, if we are in a if we are in a drawdown and we notice that, okay, we have 2 systems that have been underperforming for the last year, like they're losing money or they're just not matching the back test. We may remove those systems in the next month or replace those systems with new ones. But it wouldn't affect their entries and exits. Like we wouldn't go in and just turn it off or change the exits. Obviously, that would be a terrible mistake. But on a longer time frame, they may affect our decisions in the future, but they're not going to affect the day to day.
Makes sense. Cool. Your most watched video is I coded a stock market trading bot. This is how much I made in a week.
Yes.
Why do you think that's? You think it's because of the title or the content of the video?
Yeah, it's definitely because of the title. The timing helped too, being that was back in COVID, so everyone was home watching videos. But yeah, I'd say it's probably the title. It's very clickbaity. And it's more of an entertainment piece. Obviously, there's some education behind it, but obviously there was luck involved in those returns. And I made that an entertainment piece. Now being more mature, I wouldn't do that again. As you see, my videos have changed a lot to be more statistically focused. But yes, entertainment wise, that's why it did so well. Plus the COVID timing, everyone being at home watching videos and not really going out, definitely, helped with those views. So
Do
it's
you do you plan to do another few entertainment videos, or you want to stick to your data science?
I do want to try it out. I want to merge them better. Obviously, my views have dropped a lot. I think everyone's views have dropped,
Yeah,
but I do want to get more new traders in the space, and I want to teach them properly. Sometimes you need to do entertainment to bring them in, but if I can use that at the forefront and then bring good statistical analysis at the end of it, I think that's a win-win. I have lots of ideas. I've been lazy. I haven't been how I once was back then making videos. So I gotta get my creative ideas. I got a whiteboard in my office over there, and I have some ideas for videos. But yeah, I do want to get back to that because I want to make it exciting and get people excited about it, but also teach them properly and show them how to do it properly so they don't they maximize their chances of being successful.
hmm. Sounds good. So, did you see um, all trading channels going down with the attention, with the clicks? I thought it would be especially for crypto-based channels because of the the crypto channels I usually have a 1-to-1 correlation with the Bitcoin price. When you look at the
views, yeah, they correlate.
It's pointless to track them because you see it. You can just look.
We
at
got to
the
build
Bitcoin
our own
price.
index that does that, that tracks the YouTube views, and you can trade the YouTube views. That would actually be funny. Yeah, I've noticed not even traders. I think everyone's views have gone down. But in the trading space, yeah, I think when obviously there's much more saturation, but you're right, they are correlated with the price. If Bitcoin is doing well, like early in February and March, I noticed I was getting a lot more recommended videos to me because the views were doing so well. And personally, with me, if my views don't do as well, especially if I don't make money, I do post monthly return videos on how I did for the month, and the videos that the videos that I don't make money, or the months I don't make money in, I get less views. So people want to see you succeed. Where if you're not doing too well, they're not as willing to watch you, which is totally understandable. Um, I noticed that with crypto too. Bitcoin obviously is been in a drawdown since March, so I'm sure the views are going down. And also, people don't make money in the space too. They're just more willing to kind of just leave and come back when they start making money. And usually that correlates when
Yeah,
an instrument is going up in price.
yeah, it's super stupid, and yeah, it's so true how people just disappear when the prices go down, while it should be exactly the other way around.
Yeah, yeah, they should be hopping in on some mean reversion trades. I guess it's just human psychology. Yeah, it's when something's exciting, there's got to be some, I'd say, like some gasoline behind it, where there's some fire igniting, and with the trading space, that fire is the price. So if it's green, then it's like, oh, let's check it out. Oh, it's going up so
Nice.
much. People are making
the
money.
fire is the price. That's a good one.
Fire is the price. Yeah. So yeah, it is interesting. It's a dangerous space too. It's just because someone's making money and then you watch them, you know, the next month they could have a drawdown, or not do too well. So someone watches when they see me do well in a month and then not well in a month or in a year, and they stop watching me as if like they've given up because, oh, this person's lost money. I can't trust them anymore. They suck. Or that's the reality. That's how it is, and you should be excited about that.
They stick to the people that make money every month without a single day of loss.
Exactly. And those are the people that are dangerous, because they have to be lying or trading on a paper account or something, because it is impossible to make money every day or even every month. And that's the problem. There's no transparency. No one's showing their broker statements. People just believe the screenshots or the videos. And it's not good. Now, if you're making money through it, all the more power to you. If you can make money through it, that's great. But I know not everyone is. And yeah, I wish there was I think one day YouTube or on social media will have a better transparency through some type of verification system. I think that'll help a lot.
Some AI that connects your YouTube channel to your brokerage account and
exactly. Yeah. It's like this person's real or this person is not, right? Have you seen those like either I think they're like Facebook ads or Instagram ads, and it'll say, this is true or this is not true, and here's why. I think YouTube will have that eventually, but
I didn't see that. How do they work?
Yeah, it was like if someone posted a screenshot on Instagram, and it was controversial, so I won't mention it, but say it was a controversial post, so you could be on the fence of, hey, is this true or not? Meta would do a fact check, and at the bottom under the post, it would say, this is true because XYZ, or this is not true because XYZ, be careful. So similar to that feature, I think we may have that for traders in the future. But yeah, it's hard to verify people, and some people just don't want to put the energy in, to verify people, because it's a lot of work. So
if somebody watching or listening here is new to trading, what would you advise so they don't go out and follow what Crypto is doing?
Um, my biggest advice, if obviously I'd have a lot of advice, but if I were to give one big piece of advice, I would say do it on your own and trade with a demo or paper account for at least a year to understand how the volatility of the markets work. And after that year, then look at someone in the space, either through a book or through a course or mentorship. I've gone through many courses too, but find someone that is in your eyes verifiable. Someone that has either posted their broker statements or has won a trading championship or runs a successful business that's not in the business of selling digital products. So someone that you see as verifiable, and learn from them to accelerate your learning. That would be my biggest piece of advice.
And when it comes to discretionary trading versus algo trading or quant trading, how to decide?
How to decide? Yeah, I'm very biased towards quantitative trading because I like systems and I like using math. I think using math to run systems that have a mathematical edge is the only way to trade and invest, or else you're gambling. So it also fits the lifestyle for most people because you can maybe run automated trading systems while you work or after you work. Discretionary trading is more tedious and more hands-on, so you would have to take a break from work to do that, which may cause issues with your work.
Do you know successful discretionary traders?
I do, yes, I do. I have a friend that was a mentor to me, and he worked for a hedge fund. He was a portfolio manager for a hedge fund, and it was discretionary trading. But
not day trading.
No, yeah, they were holding positions for days to months, so they weren't getting in and out the same day.
So let me reframe the question. Do you know any successful day traders?
Discretionary day traders, no. Quantitative day traders, yes, I do.
Mm-hmm. Yeah. I love the question because people that are like really serious about trading, like you, they usually say no. And I personally, I don't know any day trader. And also in the first episode of the podcast, I pulled out a paper that I found through Coding Jesus, like that looked at like 20,000 day traders in the Brazilian equity market. None of them being really successful.
Yep. Equities too. I mean, with futures, it works for us because with futures, I think it's with the leverage, it's a little bit easier to day trade and build day trading systems for and be successful, just because the leverage alone allows you to capture enough profit to run a business. With equities, it's a different option. I don't have much experience with building quantitative trading systems for equities, but from what I see in the volume, it would be very hard with equities. Futures is easier to do that. But yeah, that you said that article said what 99% of day traders in the equity markets fail.
Yeah, something around that. And the remaining 1% doesn't earn more than a bank teller.
Bank teller salary.
Yeah, like 30K USD.
It's hard. It's like running a business. How many businesses fail per year? Probably the same amount. And trading is the same aspect. So yeah, I think you can be a successful quantitative day trader with building systems, but it's just as hard. And it's like running a business, even though maybe you're not in the business or you're working for the business. It's just as hard because you have a lot of competition, and you can't be successful. You gotta push through it, use math test systems properly, back test them properly. So many tidbits of what you need to do to be successful with this. I wouldn't have time to list them all, but
No. What are your like top 3 resources that you can recommend to learn?
yes. So Systematic Trading by Robert Carver. It's a book. It's really good. I just finished it last week.
Is it very mathematical, or can somebody without
it has the
science
first
background
few
read it?
chapters are beginner.
Mhm.
So the whole book overall is mathematical, but the first couple chapters glide you into it. Um, that's a great book. Quantitative, I think it's called Quantitative Investing by Ernest Chan. It's my second. It's also a book. That one is more beginner. So if you're completely don't know any math or coding, that would probably be a better start.
What is it about?
So it's about building your own trading systems for a business as if you were running your own business. And Ernest Chan is the author. He runs a CTA fund, a futures fund. And it goes very basics, like what is a trading system? How can you code trading systems using Python or MATLAB or TradeStation or Excel? And every single chapter, he shows you how to do it. He shows you the code as well. So you can literally copy and paste the code and plug it in and it will work. But yeah, it's from the very rudimentary of what is a trading system, what is a back test, to how do you include commissions, how do you include slippage, what is a portfolio, what is correlation. Yeah, it's a very much more beginner friendly book than Systematic Trading. So I would do that one first, Quantitative Investing by Ernest Chan, then Systematic Trading afterwards.
And you learn how to build your own backtesting systems in Python, which is not so much beginner, but they start doing that in that book.
I did, yeah. I used a lot of open source stuff like it's called Backtrader. I've done that in Python and some other products.
Vector BT?
Backtrader, yeah. Or Vector, yeah.
Vector BT. Yeah.
Yeah. Now, to most people watching, I would recommend using an existing platform because building your own, while it does sound cool and fun, if your goal is to make a return in the market, you want to spend more time building strategies. So NinjaTrader, TradeStation, products with already available backtesting engines are a trivial choice to use. So, but maybe if you want to build a business around it, if you want to build your own engine and maybe sell it as a software as a service, or there's something really custom you need to do, then go for it. But for every other scenario, I'd recommend using an existing platform to backtest.
For sure, easier, not as steep as of a learning curve.
Yeah. Think about all the bugs and errors, though. Too,
Yeah.
it's just so many.
Will take you years.
Mm.
Do you personally invest? Like, do you have portfolio management for your private treasury?
Yeah, I trade my own trading systems with my own capital. And then I do have a retirement account with S&P in it as well.
But not like buying silver and putting it into some grave.
Buying physical gold, yeah. I have a friend that does that. It's hilarious. He's a conspiracy theorist, but no, yeah, I have my own retirement account. I think some of your cash should be in a safe investment. But I do trade my own money, and that's what I show on a monthly basis. So yeah, I want to trade my own money. I mean, I want to be the best at this. So if you want to be the best at it and you're not trading your own money, then what are you actually doing? So I do.
Right. What do you think you would be doing if you were not into software and trading?
I would like to get into the hospitality business. I know it sounds really off track, but I would love to own my own bar when I'm older. I think that'd be cool. Just the prestige of like having, I have this cool bar in Miami or New York. I own it. I run it. And just all the, the intricacies of
like a high-end Japanese style bar with short strong with those short strong drinks, old fashioned.
serve really strong drinks and take advantage of that. I'm kidding. But no, I would like to get into that. How do we bring people in? How do we price these? How can we, use holidays to to bring more people into the bar? What's the average value of a customer? That sort of stuff.
So more from a business perspective, not so much how you cut a clear ice block into a diamond.
Exactly. Yeah. Like I would take my mathematical approach and apply it to that. And I feel like I could make it more profitable. But that's for later when I'm retired.
All right. My last question for you. Where do you see algorithmic trading in 5 years? What will change?
That's a loaded question. In 5 years, I think there will be, from the retail side, there'll be more no-code platforms and more AI assistance with charting, placing trades, like basically AI assistants asking you, hey, do you want to submit this trade? We think it's good because XYZ. So I think they're going to, a lot more firms will offer AI assistance to retail traders. And then also institutions will have their own AI assistants that can help make decisions. I mean, they're probably already using them now, but I think just going to be more apparent in 5 years. So yeah, I think that's the big thing where I see it. I think commissions will go down for a lot of trading will be more popular in 5 years. There'll be more traders.
How come?
I think even though the overall world population, there's less people are having less kids. So there's less younger people than us, but they're still coming in. I think a lot of people like to take risk. And when they see others making money on social media through trading, or even, they see shows like Billions where, they have this hedge fund and this guy's super wealthy. People see that risk and they want to take it because they want to make it big and, make money out of it, maybe make their parents proud. And trading is unfortunately one of the ways that show that, for better or for worse. I think mostly for worse. Most humans will always have that itch to take that risk to solve that problem. And the problem with trading is making money. So yeah, I think people see that and they see trading as an easy avenue to do that, and they're going to tackle it. They're going to try it. It's easier to trade ever than now. It's commissions are low. It's free for most stuff. It's easy to download a, software like Ninja or TradeStation, open up a brokerage account in a day. It's easy. So the easier it is, there's, the lower barrier to entry.
You picked up on something with the moral dilemma of trading. Do you have to hassle with that? Like, actually, you're not producing anything. You're not really providing value to the world by trading.
Yeah, I've heard of that. I know some people say they solve it by providing liquidity, which is, I guess, true, right? I haven't fully understood that. The more traders there is, there's more liquidity to make transactions happen. I mean, if you're successful with it and you make good returns, you're eventually going to spend that money elsewhere that could help, right? So you might make money and then you might buy a house, which helps the builders and the real estate agent, right? So you're helping through that through your
Sure, but still is a zero-sum game. You took it from somebody else.
Yeah. Hopefully you're taking money from the big hedge funds with a lot of money so they don't notice it, which you are for the most part. Yeah, it's a good question, man. It's a good question. I'm providing value with returns for my firm, so that's how I view it, I guess.
Great. Yeah, this has been nice. Thank you so much for hopping on the call. I'm sure many people have enjoyed the conversation.
Yeah, I have too. You asked some good questions, man. Like that moral dilemma one, I was like, "Ooh, you got me off guard with that."
You basically came up with that. You said something like, I don't remember now anymore, but I saw like the little spike in your thoughts.
My eye. Yeah. No, it was good. I like that you ask tough questions like that because I don't know, it sparks better conversations than just the boring old questions. So I appreciate it, man. I've been wanting to do this for a while to kind of get out of my comfort zone and get away from just making videos in my office all day. So it's good to talk to other traders and meet them. So I I appreciate the opportunity. I appreciate you reaching out to me. You didn't have to do that. So thank you.
You're welcome. Thank you for joining. And yeah, maybe in 1 year when the podcast has 1 million subscribers.
Yeah. We'll do another one.
We do another round.
Yeah. We'll get some more views from it.
Yeah. Yeah, because I saw there's not really something out there yet that is in this kind of interview format, especially when it comes to quant trading. I mean, there's some like of those Forex magicians, but it's very strange. Forex videos are always so hip hop. You know what I mean? It's like they all look like rappers.
Everybody loves the Forex, and it's
And prop trading. What do you think about prop firms?
they're bullshit, man. They're not real. It's all fake money. A lot of them are just, signing on these social media influencers, giving them fake accounts, and just all fake money. It's not actual trading, So I don't like them. I'm not a huge fan of them.
They don't actually trade, right? They have their own paper trade in the background where they trade basically against you and take care that you don't win too much.
Yeah, I mean, you're basically paying to be. My friend Kevin Davey said this, so I don't want to start this quote, but Kevin Davey, great algorithmic trading guy. He's won 3 trading championships. You should try and interview him too. But he said this. He said you're just paying to trade on sim, even if you have a funded account.
To trade on what? On sim?
Trade on sim.
What's that?
Like a sim account. You're paying the prop firm to trade on a sim account, a demo account, sorry. Sim demo, same thing.
Right.
So yeah, not a huge fan of it. However, if you've made money through it and you've been able to buy a house through it, I guess I can't say anything, but I think they're detrimental because you can just open a demo account with a real brokerage firm and do it for free, right? So why would you pay $100 a month for a prop firm? They're not even real prop firms. They're a real prop firm is basically matching your capital or giving you more leverage. So a real prop firm, you show up with $10,000 and they'll say, okay, we'll match 10,000 and split the profits, or we'll give you more leverage and split the profits. That's what a real prop firm is. So they're calling themselves prop firms, but they're not. So yeah, not a big fan of them.
So you neither know anyone that's really getting like paid from FTMO, or maybe there are like some people that get paid sometimes. They spread the word, right?
You know the YouTuber? He's from England, Michael Bamber, I think his name is. Do you know who he is?
No.
He seems legit, but I've been watching him for a while. And then I do have a friend here. I wouldn't call him a friend. We played golf once here in Miami, and he's been trading on Apex, which is a prop firm for futures. And he's getting payouts. I see proof of it. So yeah, I guess it works for some people, but
it's still playing directly against the casino.
Yeah, exactly.
That's probably
with fake money too. With fake money.
I mean, if you go to the casino, you get those plastic chips. It's also fake money, and you get real money when you win something, but they will make sure you win. You lose more often than not.
Yep, exactly.
Like what I saw, because so many people asked me to build trading bots for FTMO, and then I looked into it and was reading all the rules that they have, and the crypto markets are open from 0 until 23:59. So 1 minute, for 1 minute they close, and if you have a position open in that 1 minute, you're gonna be out of the.
So stupid. I know. And now they're adding rules where it's like you can't, you have to record yourself. You can't run trading systems. You have to record yourself making the trades to get approved for the payout. That's what Apex does. That's stupid. Wow. They're trying to make it as hard as possible. Sorry. They're trying to make it as hard as possible to not get your payout. So they can have more cash in their account. It's terrible.
What I heard also is they give people the payouts in the beginning with the smaller accounts to get them excited, and then they start buying more and bigger accounts, spread the word, and then suddenly they have violated the rules. Say, hey, look here, this trade, you were trading during the news event, you're out.
And cut you out. Yeah. I hope it gets fixed, but it's running rampant right now. It feels like the NFT craze right now with it. It's a good business to start.
You think it's so hyped right now, like the NFT bubble?
I think so, yeah. I think they're going to start shutting down. There's already some that have shut down that I've seen. So I think it's like a Ponzi scheme, right? Because basically any profits that you have are coming from the monthly payments of other customers that are losing. So if you can't keep getting new customers, eventually they have to stop your payouts. So they have to keep getting new customers buying ads or doing these discounts. And I think I've seen 2 of them already close down. I don't know about the forex space, but the future space. So I think in a year's time, most of them will be closed.
Well, keep an eye on that.
Mm-hmm. We'll keep track.
Cool. This has been great. Hope to see you in another episode. I will link the URL to your YouTube channel in the description, so people can follow your channel, learn about coding on NinjaTrader. And I think I'm also going to get an account there.
Yeah, check it out. I think you could learn a couple things from it. Wouldn't hurt.
Yeah, cool. I'm so bad with outros. You want to do an outro? Or was this already the outro?
Yeah, we can use that as the outro. Be genuine about it. Be real.
Yeah. We can use that as the outro. Yeah, right. That's cool. So, bye.
Appreciate you, man. Thank you for everything.
Bye.
Have a good day. See ya.